You know, for years, the Sunbelt has been the undisputed king of the U.S. housing market, but it feels like the ground is starting to shake. Today, we're going to dig into the price shock that's hitting Florida and Arizona, two of the nation's biggest real estate bellwethers.
So this is the question on everybody's mind, right? After this just unprecedented run-up in prices, is the Sunbelt's housing party finally over? Well, the data is suggesting we're at a major turning point.
And look, the evidence for this, it isn't buried in some obscure government report. Nope, it's right out there in the open, written on the for sale signs you see on lawns and in listing descriptions all across both states. The market is sending a really clear signal.
And what is that signal? Well, here it is, 45%. Just let that number sink in for a second. Almost 1 in every 2 homes for sale in Florida and Arizona has had its price slashed. This is not just some minor tweak. We're talking about a seismic shift here.
Okay, so to put that 45% into context, just look at the national average. It's only about 34%. So this tells you right away that what's happening in Arizona and Florida, it isn't just part of some broad nationwide cooling. No, this feels a lot more like a targeted correction. In the very markets that, let's be honest, flew closest to the sun.
And just to give you a sense of the scale here, we're not talking about a handful of homes. This trend is affecting over 52,000 properties. And their combined value? A staggering $119 billion. The amount of pricing pressure here is just immense.
All right, so the big question, is this a crash? Well, hold on, not so fast. Experts who are actually on the ground, they're calling it something else. They're calling it a correction. So let's break down what that really means.
You know, this quote from Diane Pithers in Tampa, it really hits the nail on the head. It's all about a psychological adjustment. Sellers and, yeah, even some agents, they were just anchored to those peak prices from last year. They were pricing homes based on, as she says, old hopes instead of what's happening today. So what's behind all this? Well, it's not just one single thing. It's more like a perfect storm. You've got a natural market cooling, of course. Then you have sellers who are still dreaming of those 2023 prices. And then the big one, rising interest rates are just squeezing buyers' budgets like crazy. All these factors together are forcing a massive strategic shift in the market.
Now, it's really easy to just lump Florida together as one giant market, but trust me, that would be a huge mistake. When you dig into the data, you find a tale of two very different states all within one.
I mean, just look at this. The difference is pretty stark, right? Over on the West Coast, in places like Tampa and Sarasota, almost half of all the listings have seen price cuts. But then you look at Miami, and that number is way lower. So what gives? Why the huge gap? Well, the answer really comes down to what's driving these markets. Tampa and the West Coast, they have way more inventory, and the buyers there are super sensitive to mortgage rates. Miami, on the other hand, it almost acts like this global safe haven for money. It's propped up by a really powerful luxury segment and a constant stream of international buyers who, frankly, are often less dependent on financing. You're looking at two totally different dynamics playing out in the same state.
And it's not just Florida. We see this pressure echoed loud and clear over in Arizona. I mean, the Phoenix metro area has a massive $9.3 billion worth of inventory that's feeling the squeeze from price cuts. That's more than any other metro in the entire country. The Sunbelt correction is definitely real, and it's very concentrated. Okay, so to really understand what's happening, we need to look past the easy headlines. There's this one key metric that all the pros use to take a market's temperature, and believe me, it tells a much deeper story.
So you're always hearing about days on market, right? In Florida, the median is 77 days, which, yeah, is higher than the national average of 63. And that sounds pretty significant.
But is days on market really the whole story? Is it the best way to judge how healthy a market is? Well, the experts say no. There's a much more powerful way to measure what's going on.
And that tool is called the absorption rate. It's actually a pretty simple but incredibly powerful idea. Just think of it like this. If no new homes were listed for sale starting right now, how long would it take to sell everything that's currently on the market? It's basically the purest measure of supply and demand you can get.
Let's actually put this into practice. Take Coral Gables, for example. Right now, there are 70 homes for sale priced over $5 million. Okay? Now, over the last 6 months, 31 of those have sold. So when you do the math, you get 13.5 months of inventory. That means it would take over a full year to sell all those luxury homes at the current pace. Wow.
And this is exactly why it matters so much.
That simple calculation instantly tells you that a luxury property with, say, 13 months of inventory needs a far more aggressive and realistic pricing strategy than, say, a starter home that only has 2 or 3 months of inventory. It's all about knowing your specific competition.
Okay, so if you're a seller trying to navigate this market, what on earth do you do? Well, it all boils down to what we're calling the seller's dilemma.
Listen, the timeline for a new listing has shrunk a lot. Those first 2 weeks are absolutely everything. That is when you have peak buyer attention. If your phone isn't ringing and you're not getting offers, the market is screaming at you that your price is too high. Waiting 45 or 60 days to make a change, that's a recipe for disaster, for just chasing the market down. The really proactive agents, they're looking at this stuff weekly now.
This quote from Phoenix broker Christy Walker, it just perfectly captures the new mindset. The old strategy of wait and see, that's over. It's dead. Today, it is all about respond and stay ahead. You have to actually anticipate where the market is going, not just react to where it's already been.
So what's the playbook for sellers in today's market? Well, it really comes down to a few key things. First, be realistic about today's market, not last year's. Price your home correctly right from the start so it's the best buy compared to everything else out there. You have to understand your own urgency to sell. And maybe most important of all, partner with an experienced agent who's strong enough to tell you the truth, not just what you want to hear. You know, in a market like this, with so much inventory and this much pricing pressure, the choice for sellers is becoming crystal clear. There are really only 2 paths you can take.
It's simple, really. You either price aggressively and correctly right from day one to capture that first big wave of buyer attention, or you end up chasing the market down, making price cut after price cut, always one step behind. In today's Sunbelt market, that is the bottom line.